learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watches coming into May 13th, 2020, and the stock market has dropped 500 points out of nowhere. 457 points to be exact, but today's move was pretty wild, and there's a few pieces of news, but looking at some stuff after hours, it's what happened in the day, but understanding the cause and seeing stuff, I got a few things to show you, a few things we've covered over the watch list that we need to be keeping our eye on, and then I have a special segment here for you today. It is, should I buy VTIQ? Should I buy VTEC? That is my new Abby vibe. We are calling it VTEC from now on until they have earned my respect. But if you saw on stream, you saw many different things, and what I will encourage you to see, VTIQW, the warrants, and then VTIQ, the stock, okay? Just follow with me if you remember Kern. Just keep that in mind, but this is what I did. I'm very fascinated with this stock now. You guys got me hooked, okay? This is it. Hopefully you see I have an open mind here, okay? So I'm sure all of you have seen this. It's had a big run up. It keeps coming up in our chat room. And if you guys don't know, we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you subscribe. You're on mobile. Press high chat. X out the chat. Hit the thumbs up button. That's important. And we better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You could post the plays, see the plays. You could hear about VTEC, everything, and a lot more. But this is why I'm bringing this up, okay? Because this is my open mind thing. I found the company. I found the CEO. I sent him a message. It's very, very simple. All I want is investor safety, and we've seen something like this before. This looks exactly like Kern, and this is a traditional NASDAQ's reverse split scheme. More or less, it's just a cheaper way to go public. So again, it may just be that, and it may not be the biggest thing. But what I'm saying, I did the same thing with Kern. The CEO never got back to me. They gave me the runaround, and well, we saw what happened. I still actually have those shares. We flipped it. We got a free bag, but we'll see. So I'm excited. Let's see what happens. But depending on how this plays out, I might even want to get puts on it because this one surprisingly has options. We did not have that on Kern last time. So we'll see how it is. No position on that yet, but we still need to talk about it a lot. So I have that. I got plays for tomorrow. I did make one play today. We did add to the long-term portfolio, and we have a few other things to discuss. And then I have basic keys to be watching out for tomorrow, and that's pretty much it. So you guys know what you need to do. I think I already told you, so don't forget the most important thing. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post them below. Source that information. Let me hear this. Are you in VTEC? Did you just buy VTEC? Did you just sell out of VTEC? Let's source some VTEC information. So right off the bat, before I switch to the keys, I want you to pay attention to the S&P 500 chart. So this was today, and then this was after hours. So there was a little bit of news that I think affected this. We'll go over, but you saw today we even opened. I mean, it was an interesting day. You know, we gapped up a little bit, but right off the open, we started to drop, and then we held for a while, then we sold off. This first one was the first piece of news, and then this came towards the end of the day. That's when it really escalated. So we closed down 457 points, but for most of the day, there's only it was like 200, then it just quickly sold off another 200. But why? Now, there's a lot of political reasons, has to do with the plays that we made, and then some of the plays that we want to keep watching. But right off in the morning, there was this news in the morning and all throughout, well, even last night, really. But it had to do with China, and it was the first piece was Trump is pulling the pension fund investments from China. So any U.S. pensions aren't going to be investing in China stocks. And then there was some stuff talking with the meat stuff, and again, all this trade stuff. That's why we titled that video, but you could even see it. We didn't do much. The market was moving in ways, and a lot of you ask about technical indicators. We've been using the previous clothesline, like WWF, but where the market closes, it's been very, very good. So there's a technical if you want it. But that sort of news is what kind of brought us some negativity. And again, we've been talking about this and what they were talking about yesterday. I think a lot of stuff is preceding it in this trade war coming back, but now coming to the keys, this is where it gets more interesting. I would say just interesting, and here's why it's interesting, because Senate introduced a Chinese sanction bill. Now, why would they do a Chinese sanction bill? Is it because the trade deal? Is it because they did this? Is it because, why would you put a sanction on China? And this is because of the Uyghur situation. I think it's the Muslim population over there. I don't even know if I could say this. I think they'll do the D word to your videos or something if you don't. I don't know, but it's a pretty messed up situation. But that's why the sanctions are in place, or that's why they did this bill. Very, very weird. I mean, again, just ask yourself the timing, or at least that's what I'm asking myself. So there was that, and then later in the day, this is the news that came after hours that I thought were getting affected by was the stimulus package. So the $3 trillion stimulus package got rejected, and there's a few things in it, but this was presented by the Democrats, by the House, their majority, and it was rejected by the Senate. So this was interesting because I want to know why now is, again, that because the politics behind the situation, it's interesting, and this is going to, I want to see, is this going to take more weight or less weight? Is it going to be more eager to make a move, or are they going to slow down with stuff? That's what makes it interesting. It's like, when do they decide to be political? When do they not decide to be political? That is what I'm trying to differentiate between this. So keep your eye on that. But again, a big news-filled day, but there is some implications to literal investment in China, as well as now even political policy towards China. So that's important. But the moves we saw today were weird, just the timing and how it escalated and the time to make those moves. But now the next thing we're going to get tomorrow is Fed Powell, baby. He's going to be talking. He has a speech. Don't expect too much, though. I don't think it's going to be, it's probably going to be like a dinner or something, or I don't know. Honestly, I don't know if they're doing dinners anymore. I really don't think they are doing dinner, so. Those were the good old days. You were able to, if you had a nice high-class profile thing, you could book Powell. He would do a performance like it was Kashi 6ix9ine. It was crazy. But that doesn't happen anymore because of COVID. And on that note, too, a lot of states and cities came out today. Like LA said they're going to push indefinitely till August. California said they're going to open up even malls for curbside and some other stuff. So that news was there and still overall interesting. And then finally, the banks were still slipping. So again, it's one thing to, we dropped, and it makes sense to see us all drop. But now, remember, banks dropped 2-3% yesterday. They did the same thing today, but they are already outpacing. We're talking losing off of new lows, whereas the market at least bounced 40%, or the NASDAQ did, from the lows. These banks are still at the lows. And again, with what's going on with bonds, everything else, keep your eye out for that. And then finally, this is my favorite part, because again, if I didn't know any better, I would just say they're watching us and it's on manipulation. This is where it gets good, and just like the bond market's tripping out. But now look at it. Just keep an eye on this, because we dropped 450 points. The bonds went down today, but now look at the Fed futures. They didn't do anything for negative rates. Now they're pricing in 1% on a raise all across the board now. Something that we didn't see before is that this is just weird. But what is that telling you? Again, is this they're watching us and they're trying to confuse you? No, this is volatility. So you're starting to see bond volatility creep in here. These are the first signs. So when I'm watching this, I'm getting kind of excited, but it's also, I'm getting kind of confused, because that's what volatility should do. That's a natural symptom. And if you need to talk to anybody about it, please consult with a professional. Option trader, similar again, those almost thank everyone for that. But this is very, very good. This means volatility. So watch that, but don't jump the gun. You saw it went from rate cut to now rate raise. So just keep that in mind. Be diligent and be smart. But that is pretty much it. Again, I still think we're approaching a different. We'll watch how we end this week. It's already hitting hump day tomorrow. We'll see coming into next week now some of this China stuff. But that is going to be important. We've seen earnings, but earnings have kind of died down. I think we might get a few other good companies next week, but if not, it's going to start really, really slowing down here. So get ready. But that is pretty much it. So let us get into the plays. Right off the bat, the first play I did was JD, so we'll go over that play. But again, if America is pulling pensions in China, maybe something's going to be happening. But again, I'm very early. I talked about this maybe a month, 2 months ago now at this point. But I think I'm sticking to it. And again, we lost money betting on it the first time, but thankfully we still have certain plays like those. Remember these pin duos? We have some of those. We got those Baidu. So we got time on them, but I made a new play and I went out to get more time. But I said, JD, I'm going to get more Baba either tomorrow, or I'm going to wait 2 days. Then I'm going to wait another 2 days, and then I'm going to get YY. So what I might even get maybe like $50 on each one, but you're going to see it, because I've learned huge volatility, big volatility, markets going crazy. It's moving. What do? we had to spend a lot of money because there's a crash, right? There's higher insurance premium. There's a higher risk. Now, insurance premium leveled out. I'm going to scale into some of these puts with a lot of time as if they are long-term shares. You're going to see me space out. So I'm going to build around this Chinese thesis. So the key is going to be not going too soon, because now with volatility cheaper and there not being as much volatility, those small scale-ins will go a long way. And then once it starts moving in our favor, we'll have to pay a premium if we didn't get a sizable position or if we didn't get the gain we wanted. But I'm going to be scaling into those. So those were the three. And then, like I said, VTIQ, I'm being dead serious. I'm going to watch this play. So I don't know if you thought I'm playing around. And again, here's the message, because again, and take this, I don't like it because it just sounds hydrogen cars. And I think some people... And I think I misunderstood it at first. It's not all hydrogen, but at the same time, there's just a lot of things I don't like about it. And at the same time, though, it could be an opportunity. So I'm trying to show you guys I'm being open-minded, but at the same time, you have to be critical, and there's an opportunity for it to get there. So here's what I'm saying. Here's what I'm going to do. I want to look at it. It could be a good play to play, but it could be good to play both ways. But I'm really capping the limited upside to a degree. And a date to watch on them is June 2nd, I believe, is when they should be converted to NKLA, will become the new ticker. But here is what I said to the CEO. Here it is. He's on Instagram. I saw it. I thought, and I go look at the page too, though, at the same time. If you go on the NKLA Instagram, go read the comments. I mean, literally, and just go look. Everybody in the comments is pumping the stock. That sort of exuberance doesn't make me feel excited when I see a bunch of investors there. And honestly, and that's why I said, I mean, you know, when I looked through the guy's profile, I said, let's get to the bottom of this. You know what I'm saying? And I did the same thing with Kern. Remember, I liked Kern. I was like, I remember I got the shares, we flipped them, but I said, hey, let me talk to the CEO, and they ignored me. So let's see what happens. And, you know, I sent this message, so here you go. You guys can see it on screen. Hey, I run a stock stream, and a lot of people brought up your stock. From my experience and some of what I've read, I am very skeptical. I have looked through your post and saw you are a God-fearing man, not to mention all the charity work. I love it, and it made me excited. I agree, never root for anyone's failures. I just want new investors protected. So would love to talk to you about the company and merger. If you want to get on the show, we could do that. And if you can show how this will be safe for new investors and not a traditional merger scheme, it would go a long way, and I would invest myself. We have 6,000 people live every day for 7 hours. Let me know. God bless. So I saw stuff on his profile. I think me and him might believe the same things, but I don't know. Let's see. But I am curious. And the fact is, I'm going to make money on this either way, because at this point, they have options. I realized it after I saw the warrants on it. After hours, I was like, it has warrants. It has options. This is just like Kern, but Kern didn't have options till it was much too late, right? And quite honestly, this seems like low-hanging fruit, where it's either going to have volatility and stuff, but it's either this is going to be legit or it's not. It's either going to be a growth trap or it's not. So we will find out. You guys could reach out to the CEO if you want him to be on here. I think that'd be interesting, but I just want to talk to him, whether it's publicly, privately, but if he could convert me to a believer, I'll buy into this. I will either try to buy and get a private placement from him, or I will go in ham on this stock if it is legit. And I have a few questions to ask to figure that out, but so far, I do not trust it, and that's where I'm thinking I'm either going to build a very big put position on this or a very big call position on this. Maybe we strangle it both ways. However, when the stock is like this, there's going to be some premium there, so we'll see. But I mean, it's looking pretty interesting. I think only time will tell, so we'll find out. But I have more plays, but even then, even on the VTIQ thing, be careful with it, you guys. Do your own due diligence on it. Even if he doesn't respond to me, I'm not entitled to a response. I hope you guys understand that. Nobody is. So all you can do is do your due diligence, because at the same time, maybe he doesn't answer, and it could be a legit company, but from my experience, it seems pretty sketchy. So I have an open mind with it. I'm totally willing to be proven wrong on this, but at the same time, nobody's entitled to anything. No one's going to give you anything. Read all disclaimers. There's a reason we have disclaimers on these videos. There's a reason they are everywhere in the financial world, and at the same time, people use those to do whatever they want. So if you're not reading actual filing and know what you're buying, just understand you will bear the consequences of that. And the only easy money is in TLT, okay? So there you go. But as far as every other play that we made today, the other play, I just grabbed the JD, and this was the play. I grabbed November. So you see, remember, we had June, July, Time's going on. They're expiring. We're going to just start pushing everything back. I still got another 30K just in this one, but then we haven't even touched the Robinhood. Actually, this account's at 60. You know, we're below it, though. I fell below my 60. I could have done better on the capital management. However, at the same time, I still got the 30. Remember, I wanted 40,000 cash, but I still have some of the shares. But I'm okay with it. I mean, I could do better, though. Do you see? And that's where I have to go through and, like, I recognize I took higher premium plays. I didn't scale in. I took too large of initial positions. Gave, you know, we kind of, I don't know, so far in the earnings, I have to run the numbers. I don't think we came out too good. Maybe barely break even, if anything, or barely eked out a profit. But I'm going to start scaling in small. I'm going to go after those China stocks, and that's what I want. So the first one I got today was JD, because Baba was already down. JD was up, but I got 5 of the November 20th, 24 puts at 58 cents. So I grabbed those today. That's it. I'm going to hold them. I'm going to hold them for a while. And my idea is pretty much on the days, honestly, I'm going to treat it like a stock. I'm going to just start trying to put anywhere from $50 to $100 every week on some of these companies and just start to spread it out with different amounts of time. But I am also going to respond to the market. So you guys see me with the shares and everything else and how I react. So keep that in mind. And then speaking of shares, I made a move today. I was actually very surprised. I flipped the coin. It told me to do it. But dude, and it crushed us, man. We were up 6% on the long-term portfolio. Look at that. It cost me 5%. Look at it. Took $187 of it's still going. No, don't do it. Oh, no, it's long term. We don't care, right? But I really, really like it. I took Uber. And why? This is something you guys have noticed. The first play we made on the long term, one of them, remember, was Fitbit. We hit Fitbit. That was a buyout play. Again, I have these Walgreens. Even though they're crap, we bought this on the small account. They were a buyer or as a merger or a buyout candidate. So in this case with Uber, what they did, they made an offer for Grubhub today. Grubhub went crazy, but I like that. I said, hey, I remember I've talked about Uber for a very, very, very long time. And I said, I thought this time would happen at a much different time. But then when I started looking, I'd buy Uber next year or when all this was done. But I mean, the coin kind of put me in an awkward position. But the thing about Uber, I was like, well, I might as well, because I remember I said we made the deposit. I haven't gotten anything. AbiVi ripped too much. AbiVi kept going up. Snapchat's up. We already had to roll over the covered calls. So it's not like any of those stocks are cheaper. I wanted Spotify. That's another one. And I have a list of all the long terms I want. I know a lot of you guys have been asking me. So I have every single long term I know I'm going to be wanting. I put them in a separate watch list for you. I'll share with you guys here. But I wanted Spotify. But you see, it's at the top end of the range. It's good where it IPO'd, you know, but at the end of the day, it's like it's a little bit towards the top end. But then Uber, I was like, well, it's barely above its 2020. It's almost at the same price at the beginning of 2020. But now I'm like, well, over the years, I'm getting to buy it below IPO price. You know, at this price, it seems like it's just as many instances above as below. So I was like, well, we'll see. Establish a position. I was like, I had a lot of cash. I think I had 6,000 or 7,000 cash. Remember, we made the deposit. I gave myself a bonus. So I think I'm still sitting on $3,100 total. Or $4,600. I think that's including margin, but I had still another $1,900. But we bought 100 shares. I spent $3,100 on them, or a little bit more, $3,300. We bought them at $33.65, but I got 100 shares. So what I'm going to do, I should have sold them there. I was going to sell covered calls, but I said I'll wait a little bit. But now I have 100 shares. I could sell covered calls. I could have done this play a little bit better by selling a cash secured put with the capital and just said I would agree to buy the shares instead and just got paid. I could have literally bought them at a lower cost basis, which would have made a lot more sense. So I missed out on that. I didn't do that. And then as far as the other ones, here's the upcoming ones I want. I said Uber's on that list. Remember, I wanted Beyond Meat, but they went up. So that's why I was like, okay, they went up too high. I wanted AbiVi. AbiVi's, it was going up too much. And then I said AbiVi and Coca-Cola. I want Coca-Cola. They're coming back down. But the thing with Coca-Cola, ex-dividend, it's in a down streak kind of from earnings. Let them play out. You see what I'm saying? Up until ex-dividend, I'm going to look to make the purchase on the dividend ones towards ex-dividend. Same thing with O. But then I'm just going to wait. The growth stocks I want, Snapchat, Spotify, Uber, Beyond, they're all doing very, very well so far. So I pretty much got the one that's performing the worst, Uber, because at this point in time, my dollar is stronger and it got me more Uber than anything. So I like that. I still want the AbiVis and all that. AbiVi's been killing it. Remember, we have it on both of the accounts. It's been helping out. I mean, it's the largest position on the smaller account, all that. But this is the long-term account. Hopefully, you've been holding on with it. But that's pretty much everything there as far as the other plays. Again, watch the Grubhub stuff yesterday. They rejected the deal after hours, so we'll see what happens. But I still think it's going to be good. And if anything, too, with the long-term, that Uber position, you guys remember, it's like having a new child. Remember, the longer you hold a stock, the better it gets. So you saw the portfolio has been pretty stable. By adding a brand new child to the mix here, it's going to be a little bit unstable for a little bit, so be prepared. But everything else, though, watch them. Watch Beyond. We still have those plays. They're up like 300%, but they came down. However, they're at a good spot. I mean, Beyond's at a crazy moment. And watch how the market laggers and leaders, because they close up today. So if they could keep outpacing, don't forget shitty stock rotation. So if the market starts acting weird, there's going to be winners. And this is a good point to pay attention to those cat dogs, is what we call that, push and pull. But BA was doing good this morning. They dropped. Watch them, but they dropped 3% again. And again, just the overall daily chart, just take a look. They're kind of looking like the banks. I wish we got the banks. They kept getting clapped. But watch out for them. The next play, I'm going to be watching Baba and then YY. Like I said, YY was up, so we could have got some of them. I got the JDs instead. I really want the Babas, but remember, Baba has earnings coming up, but I think Baba will be a very, very interesting one. Actually, wow, Baba looks pretty good. But Chinese stocks did very good, remember, through all of this. But now we see what's happening, so be careful there. Then watch the medical stocks, TMO, Abbott. They all had news. Myrna, INO, again, and even today you saw Fauci before Congress and a lot of stuff. So that is going to have an effect, but they moved a little bit weird. But INO, remember, we still have the shares in some of those, so keep your eye on that. Same thing with Abivi. And some people say, I think it's because the Allergen merger got completed and there's a lot of volume there. I think that could be part of it, but it sucks because I really want more Abivi, but I hate it at the 90 price. So I don't know. We will have to see. And again, with the whole ex-dividend, that's what I'm saying. So Abivi's ex-dividend, and you're going to get the dividend payment at the end of this week on Abivi. But watch them because I want to. They could be in the mix. So this is why I'm saying I want to see Abivi because, again, we like it. I like it as a long-term company. I love Botox. That's the allergen side. But now Humira, that is Abivi. This is one of the best anti-inflammatory drugs, but they're starting to do tests with this for the virus. So they might get their hand in the cookie jar there. So keep your eye out for that. But the ex-dividend here is going to be what? See, 414. Payout days in May, so pretty much 3 months from there. So like July 14th now, that'll be the next time, or even June 14th or so. That will be probably the next ex-dividend date. So what I'm saying is, like, it's at 90 now, so this is where you have to visualize it. It's like, what could happen in 3 months? 100 days, that's roughly 3 months. But let's see here, even like 60 days, 50 days, this is 2 months, you see? It went up and down, so what happens, where's it going to end up? So even if it rips up to like 110 for 2 weeks, but then coming into the ex-dividend day it comes down, we'll get it at the same price, or let's say it drops, vice versa. But the whole idea is for the long term, I plan on holding it a while. It's like it could run, and you might miss out on some gains, but I'm trying to build the equity position here. And then again, I also like the dividends aspect to it. So the question is, if you really are more concerned with the dividend and the price you're getting of the equity, you could wait a little bit. But if you really want to capture the growth and you don't really care, you'll get the dividend no matter what. You're just going to sit on an extra 2 months of price discovery to see where it's valued at. By the time it gets in there, then you could buy it now. And I might consider that, but I'm just going to see. I'm at least, I set almost 2 weeks with the first deposit. I really I need to make sure I have my money for Snapchat. I'm still waiting. I'm mad I didn't get my $2,000 to Snapchat yet this month, so we'll see. Oh my God, it dropped to 1730. No, you guys see, so we did that rollover. Man, that's crazy. So where is it? Yeah, so remember we did the Snap rollover yesterday. How much money did I make? Well, I made $126 on it, 148 total. That's the premium, but remember now that other contract, we sold it out at like 130. I wonder what that's at now. It's at 50 cents. So it's like $200. Yeah, so yeah, we pretty much made the same amount. So we'll see, but either way, we're in a good position with that Snapchat. But you guys saw what happened with that. But I want this thing to come a little bit lower here. I still need my Snapchat. So again, this is why, again, remember how long I've waited for Snapchat? Envision that with Abivi. But watch all those medical companies again. Guild as well too. They were dropping, but I still believe in them, even though I'm down on some of those contracts with time. Still going to be holding them. They're going to be a fiasco there, but it's, I think Remdes is still it. But then Twilio, they killed it again, and they were positive. They were much more positive earlier in the day. They hit like 195, yeah, and then they came down. Remember, we had those contracts. Even the same thing with, I think it was ServiceNow. Saw a lot of big moves, but keep an eye on those. I like them. And then finally, watch TLT. And again, this is what I was going to say with the rest of the companies. Like, you saw HD, you saw McDonald's, like everything dropped today on the Dow. So there was a few earnings laggers and leaders, but all the bigger companies saw a drop. And this is what I'm kind of saying. This is kind of an anticipation of something with the bank. So we'll see, but keep that in mind. But this might even bring about slower moves. So just be prepared, be ready. Don't react too quickly, but Remember, if they act slow, you act fast. They act fast, you act slow, baby. But watch that. Watch TLT. They actually shot up today and responded pretty appropriately today, but not as much as you would expect. Still only 1.5%, still at a low level. The 10-year is still high, relatively speaking. So don't go too early. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your armor on. I need the helmet shining. I need you in the game. I need you controlling the balance and budgets and patience, baby. And at the same time, don't bring in too much. A loss, a win. Separate the long-term and options and take it seriously. Are you really investing? Don't try to cheat the game. The game will cheat you, baby. I need you to be focused and pay attention to all the stuff going on in the world, but take it slow. Don't react too quick. Remember, act slow, act fast. You get it, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.